Hey everyone, it's Mike Bonn with the Cash Flow Company. I wanted to run through quickly where the markets are headed, what it means to you as an investor. That includes the DSCR, fix and flips, and even conventional rates. Where do we see it going through the end of the year, and what can you expect in each of these markets? So what am I actually seeing out there in the rates? When we look at the DSCR, we're seeing a pretty good drop. Even this month in August, we've seen about a 30 basis point decrease in rates. For those well-qualified clients with good properties, we're seeing rates in the high sixes, in the 75 and 80%. So that's about a half a point lower, maybe even 3/4 than we saw even 3 or 4 months ago. Now, where's it going from there? It's still up in the air. I know the Fed is talking. The quarter point in September is probably pretty much guaranteed. But where does it go from there? They're talking anywhere between 2 and 3 more. So we could probably expect on the lighter side of that. And the DSCR rates are based more on a 5-year than a 10-year. So they fluctuate a little bit differently. But I do see in the future here, at the end of this year, beginning of next year, where we're going to see these rates in the low 6s and hopefully next year in the high 5s. Next up is conventional rates, because we all need to know where the conventional rates are, because that's our end buyer. That's the people who are buying. What is the affordability for them? The lower the rates, the more they can afford. The more people out there buying, the better for us. When I looked yesterday, I'm seeing rates in the high 5s. That's if someone wants to pay the point instead of putting it into the loan and having the loan officer pay through the interest rate. But we are seeing rates in the 5.625, 5.75 for someone who has really good credit, good LTVs on owner-occupied properties. And if we can see the Fed keep dropping those rates, hit another quarter to even some up to a point by the end of this year, that means we can see these rates into the low 5s by the end of the year, beginning of next year. I think they'll level off there, because I don't think the Fed is going to drop it more than the point or 1.5, at least for the next 12 months. So we can see a level off here, but rates in the 5s compared to rates in the 7s or even 8s that we've seen in the last year, that's great for us as investors. So we see more people in the market, more activity, and we get the properties moved and on to the next deal. Now on the fix and flip side, what we're seeing with some of the larger companies out there, and we do work with large companies, we are seeing rates back into the 8% for those who have 10 plus units under their belt in the last 2 to 3 years. So that's not for everyone, but you can see the trend is going down as far as rates on the fix and flips. We're still seeing that 10% down, 100% financing, depending on your credit score. There are also a couple options out there now for credit scores in the 620 range. So we're seeing a trend of rates coming down for DSCR, which is great for your cash flow, which means more properties will now cash flow, bring in more money. Rates are going down on the conventional. That means more buyers out there for the fix and flip. And we're starting to see some movement on the fix and flip loans from some of the national lenders out there who are now getting below that 10 and even into the 8% range for those well qualified. Now, we don't see much change from that into the end of the year, maybe a quarter, maybe a half. This is kind of our new reality probably for the next 6 to 9 months as the Fed figures out what's the next step. But it's a good trend. It's a lot better than it was the last 12 to 18 months, where all we saw was high rates, no cash flowing properties, and less people in the market. Now, if you want to keep up where rates are going, we have a mortgage report that goes out, tells you the trends in the rates, and also goes through and tells you who is the best as far as fix and flips DSCR in those markets. So check below. Please also help other investors by sharing, liking, and even commenting on this video.